Two, one. We are live. Hello and welcome to PropTechBuzz, a new age global PropTech platform that combines media, products, leadership, and community all together. But why to tell when I can show already? So let me quickly give you a glimpse of what PropTechBuzz is before I invite my esteemed guest today, who's gonna talk about StegX. So before we talk about StegX and our guests, just wanted to give you a brief preview about what PropTechBuzz is. PropTechBuzz is one single platform where you can discover global PropTech products from across the globe, global PropTech leaders, conversations, and media as well, because we are also a media platform. And let me quickly show you what the when I say find global leaders, what does it mean? So today, PropTechBuzz has around 2,288 is the count this morning. These many members. However, we have VIP members as well. The VIP members are global CEOs, founders, VCs, and other large service providers. So we have created a private room for them, and these are esteemed VIPs on our platform. And yeah, you can follow them. You can see, you can converse with them, and we also have discussion boards. So discussion board is something that we launched just last week, and we already have a lot of conversations happening there already. And yeah, feel free. We have lots of channels, lots of rooms, from VIP rooms to PropTech UK. For we have rooms for different countries. We have rooms for different topics, like we have ESG reporting. We have climate. We have fractional real estate, which would be a topic of discussion today. So this is where it is. So if you're a PropTech founder, or if you have a PropTech product, submit your product for free. The submission is completely free, and then we ensure that we are launching and we are promoting it. We are not just a listing platform. We also go all in, and we promote you on our media channels, which has a reach of around 55,000 audience today. So with that, let's welcome our guest today. Uh, Daniel, welcome to PropTech Buzz. How are you doing today?
I'm fine. I'm fine. Thank you for having me, Ravi.
The privilege is mine, Daniel. Daniel, before I formally welcome you, I actually want to also let the audience know about our guest today. Daniel is the co-founder of StegX, a marketplace ecosystem that redefines the landscape of institutional real estate investment. To be fair, I have very little exposure to institutional real estate investment. I have had many guests who operate in retail real estate investment, but institutional is the first time. So I'll be very curious to ask some of the questions there. But Daniel comes with very rich background in real estate sector. He has managed portfolios across Europe, USA, Asia, and executed more than 100 real estate deals, and that are valued at over $10 billion. His experience spans serving leading institutional investors and working hand in hand with renowned asset managers and developers. And this journey has equipped him with the knowledge to spearhead innovative strategies in both traditional and digital real estate investment arenas. So that is about Daniel. Daniel, again, welcome. And please, if you have missed out on something on your career, give us a gist of your career trajectory.
Sure. I would not have a better introduction than you, but overall, as you mentioned, I've been working in institutional real estate for quite some time, so more than 10 years. And what I have been doing, especially in the last 10 years, was being the intermediary with a large fund administration platform where my co-founder of StegX and I, which we have been setting up from the scratch. And we have been acting as intermediary between asset managers from all around the world and large institutional investors. So what does it mean? What have we done which makes it special? What you just described with our rich knowledge in this field is that we have been acting not only as intermediary, we have been representing the investors towards the asset managers and the asset managers towards the investors to some degree. So in the end, we were always in between both sides of the market and try to facilitate them, always with an eye on the regulatory aspects, like what are the regulatory compliance structures all around the world, how to set up investments all around the world, how to onboard managers, how to do the due diligence on real estate investments, and all the various aspects which come with the fund and the administration of fund investments.
Excellent, excellent. And we will go deeper into that. I also wanted to understand because there's a bit of tokenization here. Okay, I have had conversations about tokenization, but let's take it to the state of tokenization today. Could you give me a sense of where tokenization is, and then we also want to let's understand the benefits of tokenization first, and then we want to know the state of tokenization today.
So, okay, let me turn it around. The state of the tokenization, because that's very important to understand, because it's a buzzword right now in the media, it's coming up a lot, and the people really don't know what is it, this stuff actually, what everybody's talking about.
Right.
So it's right. We are still at a very, very early stage. So very, very early stage means that only a few people around the world are actively using the tokenization as a tool already. But what I know is that all the banks, all the financial institutions, that they are working effortlessly or relentless, sorry, on integrating tokenization into their core products and their core operations. So tokenization, what is it actually? It's the digital representation of some kind of something of value on the blockchain. So basically, it's a digital wrapper surrounding something, and then instead of having a database somewhere in an Excel file or in some other kind of traditional database service, you use the blockchain as a database. That's pretty much the tokenization overall. And then the question you were asking, why is tokenization helpful and why investors and asset managers in the financial industry so keen on using that is basically when we look at the landscape in the financial industry right now, as of today, there's so many different kind of intermediaries who are between the two sides of the markets, like in our case, the real estate world, which I described as asset managers who have investments, who manage them over a long period of time, and investors who invest into real estate. So between those are a huge range of intermediaries who all have some fees assorted to their services and so on. Without the tokenization, many of the intermediaries will be replaced by the trustworthy system, the blockchain technology, and that makes the transactions much more scalable, digital, and also cost efficient. A very easy example, which I often like to use, is when it comes to real estate. Now, I'm sitting here in Germany, and maybe India is not the best example because of the regulations. I take Singapore, for instance, because there are very clear regulations. So when an investor here from Germany is holding a security token, a tokenized security, which is representing a real estate asset, they can transact to somebody in Singapore within 5 seconds. So the overall time in which the transaction taking place and the cost are lowered to a bare minimum of a few seconds and less than a cent. Whereas beforehand, it's easily could have taken more than 2 days for the settlement of the trade and has cost a lot more. So in the end, that's a benefit I like to always point out because the international transactions on trustworthy technology, that's where the tokenization will help a lot of people and a lot of institutions.
Got it. Excellent. Shall we also talk about the regulatory aspect of it? You mentioned about India; it's regulated, and other countries. What is the state of overall across the globe, like APAC, North America, and Europe, and so on and so forth?
Yeah, so it's a very difficult topic, and you can talk a lot, and I would say even hours about it. So I will take it short because I think it's a good topic to dive deeper into, but maybe not for all the for your audience. It's not the most relevant. So, in an overall global perspective, the regulations have been coming into life in the last years in various markets all over the world. So, namely, the large financial hubs like Singapore, Hong Kong is now very active. The UK, Also, some financial hubs like in Central Europe, especially Europe, is very progressive with the regulations. Whereas North America, you can use the existing structures or the existing laws to some degree. But because the tokenization overall is a field like you can tokenize as NFTs, as securities, as funds, and various other kinds of values you can tokenize. So it always depends how you approach your structure, how you approach things in regards to make it regulatory compliant. And that's why diving deeper into it is crucial to understanding everything. But overall, we can say that there are quite some jurisdictions which offer now very clear regulatory frameworks, and many more are working actively on it because there are local financial markets and the local also economies are reliant on having proper regulation in this new emerging industry in place.
Got it. So you briefly mentioned about StegX, okay, and its mission. Maybe could you delve a little deeper into the mission in the institutional real estate space?
Yeah, sure. So as I explained, we have a very rich background in the traditional markets, and for us, that's also where our name is coming from. We want to build a bridge to the future of real estate investing. So that's the overall mission. That means in detail, we want to help our clients and our users to have access to the best tools when it comes to how we can integrate PropTech or other innovative services into our journey or into the customer journey. So when it comes to investments, how, for instance, improve the due diligence assessments, how to improve the reportings with PropTech or innovative solutions. But the core of our business is our marketplace ecosystem. So the marketplace is where the investment itself, which represents the expertise of some professional asset manager, and the underlying asset is listed and make visible to investors who can invest into those assets via our user interface, via our marketplace technology. So that means we are bridging both sides of the market with our marketplace, and then having surrounded to have a better transparency in the market, implement a lot of PropTech tools and other innovative solutions.
Could you explain what makes a good intermediary? What is if you are not there, how is the status quo happening without an intermediary? How are institutional investors investing into these asset classes?
So no, it depends really on the institutional investor. So it's a very wide space. Like you can go from family offices or high net worth individuals even to the large insurance companies. But when we talk about institutional investors, most refer to the large insurance companies, endowment funds, and those larger institutional investors, and they mostly have the assets structured by a fund investment where external asset managers manage funds for them. So those basically they have they pool capital of a lot of investors or host separate accounts for one investor and then follow an investment strategy. So that means that institutional investors, they are reliant on the expertise of external parties. They are reliant on investment products which can be managed by an external party, and they are reliant on the infrastructure overall who's administrating their services. So the limitations are, especially in real estate, the liquidity in the market, the transparency to what the underlying assets are, and many other things which are, especially from the cost perspective, quite expensive sometimes. So what is difficult also is how actually those institutional investors find new assets and find the asset managers like those professionals who manage their investments. It can be quite challenging even if you're a large institutional investor, but when you're a mid-sized institutional investor from let's say France, and you want to look for some good asset manager who's with a rich experience and background in India, it's very challenging to find the right parties. You need to have a team, you need to do the sourcing, you need to do the due diligence on the manager, on the properties and everything related. So overall, there are a lot of high entry barriers associated to that. And how we want to improve that is basically by our marketplace, which makes the investments and the asset managers visible to institutional investors. So they can build their portfolio based on their own strategy. So they can customize their portfolio completely at a very low price point, like transacting in tokenized real estate investments or other asset classes. It's much cheaper than setting up a fund and all the associated costs with the fund setup, the fund administration. And you can pick and choose the investments you want. You're not relying on some external party. You are relying on the external asset manager as well, who's providing you this investment opportunity and managing it with the experience. But you're not reliant in the end on the funds and the pool of investments which are made available for you, which follow just a strategy, but you can build your own strategy and basically handpick every investment. So, and in addition, as the tokenization industry will prosper over the next, let's say, years or decades, much more liquid secondary market will be available where investors can also trade in and out to change their portfolio to the risk appetite, to certain market dynamics or whatever. When they want to exit an investment, there will be liquidity in secondary marketplaces who exceed the current levels.
Got it. Got it. Can I had not planned to ask this, but I know a lot of these players, tokenized players, who are offering to retail investors, not institutionals. Is there a difference between how they cater to, or the fundamentals are the same?
It depends. So overall, you can say the how you approach institutional investors is pretty similar when you do it properly or for the retail side. So since we have beforehand, like you can say, worked on best in class standards for institutional investments here in Europe, we are very well aware of what is necessary for institutional investments to do profound investment decisions, which kind of information they need to have. When I look now at a lot of retail platforms, they have much less information available. And so basically the investment decision just on the information provided would not be possible for institutional investors because they have investment committees. They have some internal guidelines and also operations which prevent to do investment decisions on insufficient information. And also risk management in-house, which all retail investors don't have. So therefore the amount and the quality of information is different. And also the due diligence reports and the content, the structuring and everything is different because retail investors can mostly stick to what the supply side provides them, whereas institutional investors often structure their investments to have more tax efficiency in place, especially when it comes for cross-border investments.
Got it. Let's now talk about traditional real estate investment models versus StegX finance, right? So could you give us a difference between them?
I didn't catch the question 100%, maybe.
So how does StegX finance differ from traditional real estate investment models?
Yeah, okay. So first of all, it's the technology we use. So when you use the blockchain technology, the investors they don't use their securities account at a bank or depository bank like a custodian. but they use their wallet infrastructure. So the infrastructure behind it, the technology part, is different. And
Mm.
because the technology is different, the whole operations are built on a different technology stack, which makes it available to investors to have more efficient transactions. What we don't do, we don't change a lot in regard to the investment product. In our case, it's like the same securities institutional investors use in a traditional financial system, or the same kind of investment structures like funds they use in a traditional financial system, but we wrap them digitally in order to bring them on the blockchain technology and so that the investors can have all the benefits from the blockchain technology and but also stick to what has been working in the past. So therefore, it's a mix and a match of the old world and the new world in order to create something not completely new, but something much more efficient and much more advanced than what has been available in a traditional financial system.
Got it. You also support the life cycle, right? From capital raising to liquidation. So
Mhm.
do you want to explain how do you support that entire asset life cycle from capital raising to liquidation?
Yeah, that's true. Can do that. So overall, our goal is that asset managers as well as investors can use our ecosystem, our marketplace ecosystem, to the whole life cycle. So that means that we need to implement all parts of the value chain of the real estate investment into our ecosystem. That starts with helping asset managers who have an investment opportunity, how to structure it, how to bring it on the blockchain, how to tokenize it, which technology to use, and all those different aspects, even going into the regulatory aspects of the investment product. So for that, we have a whole network of professional partners all around the world who can provide their expertise in the professional services and who are we working hand in hand with to help asset managers to, with the goal of starting a capital raise campaign by our marketplace. So that's basically a primary market issuance where asset managers or asset owners use the opportunity to raise capital for it, but not by flying around the world and going to dinners and asking investors in private meetings, but in a completely 100% digital way where they can make the investment visible on the marketplace interface and communicate via the marketplace with investors from all around the world. So that's a change from manual capital raising to digital capital raising. That's the starting point. And when the capital raise has been successful, we perform the issuance, the tokenization, and all those various aspects which are necessary to distribute those investments, which have been structured to the institutional investors. So that can be in a global way that we perform KYC on the investors. We have all the regulatory aspects embedded into our marketplace ecosystem that we can do the administration from day one when the issuance has been happening to when the assets are sold, maybe via the secondary market or restructured again to create another investment opportunity. And in addition, as I mentioned, we offer also our clients the access to PropTech tools and to other innovative solutions, which are not PropTechs, but digital solutions like fintechs or also blockchain companies, to improve their overall, let's say, readiness for the future, because that's what everybody's moving towards, to the digitization of the asset management and real estate industry.
Got it. Got it. Um, you keep mentioning about StegX ecosystem. Could you explain what the ecosystem is all about? The StegX. What are the components of the ecosystem?
Yeah, overall, the ecosystem is in a new world, which is mostly decentralized, and with our global approach, we need partners all around the world, like partners where we join forces in certain projects. That means, for instance, when we have somebody, an asset manager from a specific country, you always need to understand the legal aspects of the asset. So the legal aspects of the investment offering, they want to do the capital raise via our marketplace. So you need to have somebody on the ground in in the local market, like a lawyer. You need to set up investment structure. So you need a tax consultant. Uh, and that's not only limited to, let's say, Europe or the US, but everywhere around the world. You need to set up SPVs like vehicles to create tax efficient investment structures. But also you need valuation companies like those who value the real estate companies, or for instance, those who do the market research in a digital way, or those who have a custody license, a wallet license in specific markets. So there are all many components which come from the regulatory point of view, which are enhancing the investment experience via fintech solutions, but also PropTech solutions which go more deeper into the underlying asset and make that more transparent. And that's what we call ecosystem, because it's not that we can build all those solutions ourselves or are even capable of doing something which is better than out there in the market, but combining all the best products in the market, make them available to our users, and then orchestrate the different parts for our users in order to have a very good customer journey, which is better what they have been able to achieve in the past.
Got it. We have some questions. So Colleen, who is listening to this live, is asking, banks have not been very accepting of unregulated third-party AML checks of incoming funds. Are you regulated to perform transfer agency service to perform this KYC and classification?
Okay, yeah, very specific question. So it so I don't know where in which jurisdiction Colin is talking about. In our case, we are using Germany. That's where we are located. And in Germany, the regulations are pretty clear in regards to the KYC. You need to perform a proper KYC on the users
Mm.
and a proper KYC when they want to also onboard legal entities, like which is the uh, common business case for institutional investors. Luxembourg, I think he's a Luxembourg, right?
Yeah, he's saying Luxembourg, Ireland, and Germany.
Yeah. So getting back to the KYC AML, so you need to have a complete KYC onboarding, and you need to have a licensed partner or licensing partner if you do not have the licenses yourself. So in our case, we are working with a licensing partner here in Germany, who is under the supervision of the BaFin. And in the name of the licensing partner, we perform the brokerage services as a tied agent. And therefore, this licensing partner is performing the KYC checks and all the following all the regulatory aspects of what we are doing on our marketplace. Uh, Therefore, they are included in the KYC onboarding, the investor onboarding, but also the order management, like approving the orders of the investors. That's necessary from a regulatory point of view, whether you have the licenses yourself or if you have the licenses or you use the licenses from somebody else. What I know in Ireland, it's not that ready yet, what I understood from market participants. And when it comes to Luxembourg, we structure via Luxembourg our investments, but since we are operating from Germany, we fall under the German law. So also don't see so many platforms in Luxembourg itself where they are using the Luxembourg regime, especially the securities regime, because it's very complex to find bank accounts, to find also from the regulatory perspective. I hope that answered the question of Colin.
Cool. I'm sure it did. May I also ask a question about the sense of TAM? Okay, the total addressable market. How big is this institutional investment market? I'm sure it is big, but what can you put a number to that? And also a sense of how many players like you exist today.
Okay. Then first, let's look at the numbers. So there are always some, let's say, some market research where somebody saying 16 trillion will be the total tokenized market. I think that's what Boston Consulting Group said. Some and go even further. Some are a little bit less. For me personally, it's very difficult to understand what the market size will be because it will depend on the adoption rate of tokenized investment into the whole blockchain technology overall. When banks are doing all their repo financing and their intraday financing and some kind of security issuance within the banking system, on the blockchain technology, what we see now a lot happening when you look at what JP Morgan, Goldman Sachs, and everybody is working on, and how many people they hire to build blockchain system for their internal operations and also interbank operations, then I think the market will be much, much bigger. But what the market will be for institutional investors to use the tokenization and tokenization of real estate to make investments will also depend a lot on the adoption rate of themselves and how their financial counterparts, those they are using, are offering solutions like custody solutions, which is currently still a little bit of a bottleneck from my perception in the market. Like, how can actually an institutional investor have a wallet infrastructure in place, which is secure and also sometimes hosted maybe by some trustworthy party they already are doing business with for decades.
Got it. Excellent. And let's now also talk about what the future is. You gave the status quo. Where is the, and you also mentioned about how the next few years would pan out. But do you want to give a sense of the future, gazing into the crystal ball, as they say? What is the future of tokenized real estate looking like?
So the future will look pretty similar like what we see today, but you will have a much deeper understanding what is below the surface. So what we are doing today is the starting point to make investments digital, to make the transactions much more efficient. So that's where we start from the investment itself. But what is below the investment are where all the data is coming into play from the real estate side. And there are so many ways how the blockchain technology is already improving in niche products, the operations of real estate. When we look, for instance, you have mentioned before, you have also topic about ESG. Now, how to transfer data in nowadays, but how you transfer data in the future might also be the tokenized, that data will be tokenized, sent across multiple stakeholders, and that the tokenized data is a single point of truth. When it comes to the payments, we will very likely will all use CBDCs, so central bank digital currencies, at the end of the decade, instead of using our traditional currencies. Like in Europe, you will have a digital euro, for instance. So you will pay with digital blockchain-based currencies. You will buy blockchain-based tokenized products, and those tokenized products will provide more insights because the data below those products in the data level are tokenized, made available to various parties who use this data from a single point of truth, the blockchain itself, to build new services, new innovative solutions on top of that. But because we are in such an innovative space, like you can see now in AI, I would not have imagined that what kind of great images you can do nowadays already 2 years ago. You also cannot foresee what the future will hold for the blockchain and tokenization overall. But what I can say, it will be better than what we see right now in the market.
Got it. Got it. Before we end, we have some audience questions. I think it would be unfair to them if we do not ask the questions from the AMA that we had promoted. So let me quickly share. Um,
Sure.
let's go to discussion boards. Then let's go to fractional real estate investment discussion channel. And here there are the AMAs. So we asked the community, and some of them have posed questions. So I do not know how many. Yeah, so we have around 3 questions. So Ashank asks, keen to understand what novelty would tokenization bring for European real estate market, which has been well entrenched with personal ownership via REITs. Do you get the question?
So he was asking how the tokenization improves via REIT structures.
Hmm.
Uh, so overall, we need to distinguish, I think, between single asset REITs and multi-asset REITs. What we see in most markets, because the costs for REITs are rather high, is that um, REIT structures are not widely used for single asset deals, rather they are very huge. And most of the REITs are also, they have a sponsor who has been sometimes a developer or something. So a REIT structure sometimes does have higher costs associated to it. I would say it like that. And also the REIT structures, you need a securities account, you need to go via exchange and everything. So the transactions are also more costly. When you now come to the tokenization, what I try to explain from the investor point of view, you can handpick your assets, you can invest those amounts you want, and you're not limited to a specific REIT or pool or like let's say basket of investments which are in a multi-asset REIT, but you can select the assets you want yourself, transact them within seconds at a much lower price point.
Got it. Got it. Let's take the next one, which is from Colin again. Colin says, fractionalization or democratization of real estate was pitched over the last decade and has largely failed to live up to the claims. How are we learning, and what makes this time more promising? Liquidity post raise is dependent on continuous marketing efforts, which has plagued various previous efforts, especially small and micro cap offerings. Where will these efforts come from?
Correct. Yeah, I think Colin explained it very well in his question already, where the challenges came from in the last decade. And you can sum it up in one word: liquidity.
Mm.
Because we are at the starting point of this tokenization, let's say, era, liquidity is very, very limited in the market. Especially, I speak to a lot of smaller marketplaces who are facing challenges because their customer acquisition costs are rather high, or they don't see enough, a sufficient amount of liquidity to really do um, capital raises effectively via their marketplace. They use the nice fancy blockchain. The user interface look great, but they don't find enough liquidity in the market or enough investors to invest into their investments, especially when they are have a retail focus. And that's what we are trying to tackle, because that's what I've heard a lot of so many times. Liquidity is a challenge. So our goal, besides having our own marketplace, is connecting other marketplaces within our ecosystem and provide them the access to the European market, for instance, but also to other digital exchanges or distribution channels where they will have a wider reach to institutional investors and also have a better visibility of their assets, not only via our marketplace, but also via the channels of our distribution partners. So basically, from a siloed approach, which we have seen in the past, where everybody was building their own marketplace, was hoping the clients would come, we are now going into a stage where the interoperability, not only of blockchains, but also of marketplaces on the supply side, will help to go into find the pools of liquidity which are out there. And as the technology is more evolving and the adoption rate is increasing, what we see, there are also many players with a lot of money who build up new huge liquidity pools to access real estate all around the world, are entering into the market because also the technology is improving. But connecting those liquidity pools with those smaller marketplaces, especially what you mentioned, the micro investments or micro capital raises, was always a challenge in the past. But we have been building in the last months also various products to help our client, help those marketplaces, help also our clients, and to find more liquidity in the market and the access to the liquidity via our ecosystem.
Nice. Yeah, you wanted to add something more?
No, that's okay.
Okay, cool.
But also when you want to have a follow-up question to everybody, feel free to, you can find me on LinkedIn, write me a message.
Definitely.
Or so there, of course, also in PropTechBuzz, you can also drop me a note there.
Yes, so we already have fractional real estate and tokenization as a channel, so we can continue having conversation there. In fact, there are lots of other people who are specialists from that industry. They could also jump in, or there is already a thread here. You can keep posting questions so that Daniel could answer it here. So we have a last question, and this comes from Alek. He says, as long as the regulatory framework supports such technology and innovative approaches to investing, this will fly, as this gives retail investors the ability to invest in multiple properties. It also addresses aspirational goals of certain section of retail investors. So I think Alek was not aware that you are building for institutional investors. So maybe we can leave it at that.
No problem. But I think, from my perspective, the institutional investors, it's the lower hanging fruit in retail. But the retail market will be huge when it comes to real estate because everybody will have the access to real estate. So it will, in the future, democratize the market to another degree, which we haven't seen, which also was not possible with REITs and other, let's say, exchange traded investment structures. So the retail market is a huge, they will benefit probably the most from the adoption of the blockchain technology when it comes to who will be able to invest and how they will be able to invest.
Okay, cool. Well, this brings us to the end of a very, very fascinating and insightful conversation with Daniel. As you can imagine, Daniel comes with deep expertise, and this entire expertise came through during the course of this interview. So thank you, Daniel, for taking time out and speaking with us everything about fractional tokenization and what StegX ecosystem provides. Thank you so much.
Thank you, Ravi, for having me. It was a pleasure.
Bye-bye.
Bye.